Good evening, friends. Hi, this is Ashish, and welcome to the another video. I hope you guys can see me and hear me properly. If you guys can see me and hear me properly, just say hi in the chat box. Just give me a confirmation if you guys can see me and hear me properly. Hi, Suresh. Hi, Bishwas, Rishi. Just give me confirmation, Gagan. Ganjan, Aditi. Thank you, guys. Thank you so much for the confirmation. In this video, I'll be talking about something very important and something which most of the people are looking forward these days, and it is related to stock market. A lot of people are interested to learn about stock market. A lot of people are interested to invest their money into stock market, but they are getting like little confused whether this is the right time to invest into stock market or not, whether the crash is coming into stock market because market is at all time high. Market is trading at all time high and it's like crazy. Market is going day by day and it's moving high. The economy is down, but still the market is on the all time high. And this is how market works. This is how market works because market is designed in such a way to make fool of lot of people, right? See, there are, as I always say, that there are two types of information available on this planet Earth, right? Information for masses and information for classes. Never follow the information for masses. Always follow the information for classes. So if you're looking forward, like whether this is the right time to invest into market, is because from the last few days the market is on downside. Market is going crazy. It is going day by day on the upside. Market touched all time high. Indian market, US market, across the world, most of the market is at all time high. But from the last 1 week, yes, the market is on the downside, but a lot of people has missed the opportunity. A lot of people was thinking that is this the right time, because when the market got crashed in the month of somewhere on February and March, when the coronavirus started, COVID-19 started, people were thinking like this is the end of the world and this is the end of the earth, so people are taking out their money. But after that they missed the opportunity and market is at all time high again. Okay, so but yes, as I said, market is giving opportunity. Market always has an opportunity. When the market got down in the month of February and March, that day also market has a lot of good opportunity, and today also market has a lot of opportunity. See, please understand one thing. You're not investing into market. You're not buying Sensex, you're not buying Nifty, you're not buying Bank Nifty, you are buying stocks, right? End of the day, you're buying stocks. So you need to find an opportunity within the stocks, and there are hundred of opportunities which are available every day. Every day, sometimes we are able to pick it, sometimes we are not. This is how the business works. This is how stock market works. If we are able to pick those opportunities, we feel good, we feel proud. But sometimes if we are not able to miss the opportunity, we blame the market. But this is not it is, right? So market always has an opportunity. This time also market has an opportunity. But again, the question is whether we should invest it or whether we should not. See, I'll give you one thing. A lot of people who have not started investing into stock market, I'll tell you one thing. If you're thinking that stock market is at risk, stock market is a risky part, stock market is not risky. Stock market is not risky. Stock market is volatile. It is not risky. If you are not investing into your money into stock market, then you are at risk. Believe me, guys, if you are not investing your money into stock market, you are at risk. Why I'm saying that? Because see, if you're not investing your money into stock market, where are you investing? You're investing your money into bank, mutual funds, fixed deposits. Like, take an example of fixed deposit. How much money the fixed deposit is giving you? Somewhere around 6%. Maximum to a senior citizen these days, it is giving you 7%. So if you're getting an average 6% return on fixed deposit, and the inflation is running somewhere around 6%, 4% as of now. So inflation is 4%, and you're getting a return of 6% on your fixed deposit, and after the tax deduction, because on fixed deposit there is a tax deduction also. So money which you'll be getting it after the returns, you have to pay the tax to the government, right? So end of the day, you are getting somewhere around 4.5% only. So inflation is running at 4%. You're getting your money is increasing by just 4%. Sometimes you're not able to beat the inflation also. So if you're thinking you're putting your money into banks, mutual funds, or in fixed deposit, and you're thinking that your money will grow, it will not. Believe me, guys. End of the day, nobody's going to make money for you. It is only you have to make money for you, right? There are people who can help you, but end of the day, it is not fixed deposit, and those things will not make money for you. And I'll show you and I'll prove you those things. But before that, I want to make it you understand that if you're not investing your money into stock market, you are at risk. People are thinking stock market is risky, but it's an opposite way. If you're not investing money into stock market, then you are at risk. Okay, so start investing your money into stock market, and I'll be showing you something very important, something which will help you to understand where the market is going in the next at least 3 to 4 months, and something which will give you a confidence today. Whether should I invest into market, or whether should I not invest into market? Is this the right time? What stock should I buy it? Market is going down. Media channels are telling you something. So at least it will give you a little bit of idea whether should you invest it, or at what time the market get crash. What are the levels? I'll be talking about everything in detail in this video. But before that, if you're watching this on YouTube and if you have not subscribed to the channel, please subscribe to the channel and click on the bell icon if you have not done so yet. Okay, so please do so. All right. So I'll be sharing you almost 4 to 5 insights, and those insights you will not find it anywhere. The insights which I'll be showing you in this video, you will not find it anywhere, because as I always say, don't follow the masses. So I don't look at charts as far as 90% of the people are looking forward, because people look like candlesticks, trends, and if the trend is going down, there are a lot of patterns available in the market, there are a lot of indicators available in the market like RSI, moving averages, band Bollinger, hundreds of indicators are available in the market. See, these indicators will not make money for you. End of the day, you have to create your own indicator, and my indicator is here. Okay, so if your indicator is here, you can pick up the market, you can see what market is not showing to other people, and if you can pick it up from here, look at the broader picture. Always look at the broader picture. Okay, don't look at the small day, 1 day decline, 2 day decline, and you're thinking that the market will go up, market will go down. Because from the last 1 week, as I said, the market is down. Yes, market is down, and it looks that market can go further down. Yes, so I'll be sharing you where the market can go, till what level, as per my understanding is. It may be possible I'm wrong, it may be possible I'll be right, but this is not the business to predict right or wrong. This is the business to make money. There are people who go wrong also, but still they make money. So it is not about whether you are right or wrong, it is about end of the day how much money you're making. That is about stock market. Okay, so let me share my screen, and just a second, guys. All right. Okay, one second. Okay, so now you guys can see the screen, right? Okay, great. As a disclaimer, I'll be talking about few companies and few charts. It's my personal view. I'll suggest you to do your own analysis also. Okay. See, the first thing which I'll be talking about, the first insights which I'll be talking about is, let's understand the market from the last at least 3 to 4 months, where the market is going. Okay. And before that, I'll show you one thing. See, the market is down. If I'll show you, this is the market as of now. Okay. And if you see, the market was going on the upside. These are prices which you're seeing. This is a Nifty chart which is in front of you right now. And if you see from the last few months, few days almost, the market is going on the upside. And this is somewhere around 16th or 17th of February. Since 16th or 17th of February, the market is going on the downside. So almost now, I can say 8 to 9 days, 7 days, the market is going on the downside. And if I'll show you, as I said, that sometimes we are also able to predict the market on the right way. The same message which I posted on my Twitter channel, Twitter also, and on my inner students groups also, that I'm looking the market to go down. And this is what I said on 17th of February, before the market opened, that for the next few days, I'll avoid taking any buy side trade in the trading, right? Any type of long trades, any type of buy side trades, I'll be try to avoid taking those trades, because I was expecting the market to go down. And if you see the chart, there is no indicator on the chart which is telling you the market can go down. There is no pattern, no indicator, nothing. If I'll show you this chart, you will easily say that market is on the upside. There is no indicator which is telling you the market is going on the downside. But how I was able to do that, I'll show you. And on the same way, how I am saying that market still has the good opportunity. Why I'm saying that? Based on the same indicator by which I predicted that market can go down. Based on the same indicator, I'm again saying market has the right opportunity these days also. Okay. See, if you see, this is the chart of Nifty for almost last 3 months. Okay. This is somewhere around November. So this is from the November month. And if you see from the last 3 months, there are 3 times where the market has declined. This first decline is a small decline. Okay. This is a very small decline. Second decline also. And now it is a latest decline which is going on. So what is this chart is telling you? If you see this chart is telling you, yes, the market has gone down. Okay. But what I did was, I didn't go to the charts. I didn't saw the prices. I saw there are three major stocks. Okay, now listen to this very, very carefully. And before that, if you want to write something on the comment box, you can do that. If you're watching this on YouTube channel, if you want to share this video with your friends, with your Twitter, Telegram, WhatsApp, you can do that so that it will get benefit to other students also. Okay. So what I did was I saw three of the important stocks. The first stock is HDFC Bank. Third one was Reliance, and second one was, sorry, Reliance, and third one was SBI. Why I was watching these three charts? Why I was watching these three stocks? Why? Because these three stock has a very high weightage. Very high weightage in the Nifty and the Sensex. So when we are saying Nifty, Nifty is a combination of some of these stocks. Okay. Nifty is the combination of some of these stocks. So these three stocks, HDFC Bank, Reliance, SBI, these three stocks are very popular stocks, and these three stocks has very high weightage, in the Sensex and the Nifty. So what I did was, if I'll show you the next slide, see, this is the next slide. So if you'll see this chart, above is a Nifty chart, okay, when the market is going down. And below, if you see, there are few HDFC chart. And what is this chart is showing you? If you see this chart, this blue line which is an HDFC part, this is not the prices. Okay, so please understand this thing. Below Nifty chart is an HDFC chart, but this HDFC chart is not the prices. This is not the data as far as the price is concerned. This is the data whether the big players are buying it or they are selling it. Okay, you're getting my point? How I create this data is a very different point of view. Maybe in another video, in one of the video, I'll show you how to do that. But this HDFC chart is not the price. This HDFC chart is showing you whether the big players are buying the stocks or whether the big players are selling their stocks. Okay, so if you'll see this, the first green line, when the first small decline happened in the month of somewhere on December, at the same time, the big players were buying. Okay, big players were buying at those levels. Same time when there was a second decline, the prices was going down, but actually the big players were buying the HDFC Bank stock. They were buying it. And in fact, if you see, when the price is going down, they were buying it. And when the price is going on the upside, they were selling it. See, this blue line is going on the downside. So this blue line is not the price, as I said. This blue line is an indicator. It is not an indicator. It's just something which I've created by my own, which tells you whether the big players are buying it or they're selling it. They are interested to buy HDFC Bank or they are not interested to buy HDFC Bank. Okay. So if you see this, the prices are going down. The prices which you can see, which 99% of the people can see. But if I'll show you something which is not easily available everywhere, if you see, big players are buying it. And when the prices are going on the upside, big players started selling it. And that is how they do. They do the opposite of what retail investors are doing it. And same thing is happening these days also. The market is going on the downside from the last 1 week. The prices are going down. Price is something else, but the value is something else. But they are finding the value in HDFC Bank and they are buying it. They're still buying those stocks of HDFC Bank, right? And how I was able to predict that the market is going on the downside, it is because of the same indicator. Because if you see, they're selling, and the selling was at bottom. Okay, so they have sold all those things. Now, if understand from that point of view, if big players have sold whatever they are holding it, if they have already sold, now they want to buy it. And they will not buy it at higher prices. They never do that. They will take the market on the downside, and then only they will invest their money into stock market. You're getting my point? Is that clear? If it is making sense, just click on the like button. If it is making sense to you. So what big players do is they don't buy the stocks at a higher level, like how most of the retail investors do. They always buy stocks when the prices are on the downside. So when the prices are on the high side, they started selling it. Now they want to buy it again. So if they want to buy it again, they will not buy it at a higher price. They have to ask the market to come down. And that is what they're doing right now. They're taking the market on the downside and they're still buying it. So this is one of these stock. Now let's see if this is something similar happening in another stock. Exactly something similar happening in another very high weighted stock, which is called Reliance. You're getting my point? Something which is same happening in the Reliance stock also. When the prices are going on the downside, actually they were buying it, right? Same is happening these days also. The prices are going on the downside, but actually they are buying it. They're buying it. You're getting my point? So another this is one of the indicator. I'm not saying this is the only indicator. This is the only thing which you need to see while seeing whether the market is on the going on the downside or whether it will go on the upside. But this is one criteria, and this is a very important criteria. And the success rate of this criteria is more than 90%. Okay. I always check this criteria whenever I do some kind of investments or whenever I do some kind of trading. So I always check this criteria, and this criteria has a success rate of 90%. 10% of the time, yes, this criteria also fails. But as of now, if you see, all the three stocks are showing you the same thing. And in fact, if I'll go back and show you when the prices started decline, if you see this SDFC Bank prices started decline from here, right? Prices started decline from here, and at the same level, they were at the bottom. They want to buy. Same thing if you see in Reliance also. The prices are at top, but if you see their buying levels, they have already sold all of their stocks. So they want to buy it again. Same, see the prices are something else. The buying and the selling of the shares are something else. So if you see this buying and selling of the shares is an indicator, if you think it from that point of view, it is another indicator. The indicator is at bottom. They want to buy it. Same was happening in HDFC Bank also. HDFC Bank indicator was also at bottom. They want to buy it. So they are buying it. From the last 3-4 days, they are buying it. Actually, they are buying it. Is that making sense? Yeah? Just give me confirmation. Is that making sense to you guys? So if you see all these three indicators, it is making sense, and it is showing you that yes, they are buying it. It is not the selling which is coming as of now. Okay, this is one indicator. I'm not saying this is the only indicator. Second thing which takes the market on the upside. See, there are three main factors. Because of which the market goes up and down. The first factor is the sentiments. Sentiments take the market on the upside. Sentiments always. Sometimes people think, how can sentiments take the market on the upside? Yes, sentiments take the market on the upside. I'll give you a small example. In case of Yes Bank was a very popular stock. It was going on the upside every month, every year. But after that, they started going down because of some scams and something, which I'll talk in another video. But the people started buying it. A lot of people still holding Yes Bank stock. Why? Because of sentiments. It is not because of any technical reason, or it is not because of any fundamental reason. They don't have such type of caliber that they can see that the market is, that the Yes Bank can go on the upside. They are only buying, 90% of the crowd is buying because somebody else is buying it. My friend in my office bought Yes Bank stock, so I'll also buy it. Yeah, that is how most of the people do. Somebody in the news channels was telling me about Yes Bank. This is how our mind is designed. God has designed our mind in such a way. Yeah, so a lot of people buy stocks because of the sentiments. Then the second criteria, which is very important while taking the market on the upside or on the downside, is the liquidity. If the money is not coming into Indian stock market, the market will not go on the upside. That is the main criteria. So if we'll talk about the liquidity is yes, there is a liquidity in the system. From the last 3 to 4 months, big players are buying. When I'm saying big players like FIs, DIs, mutual funds, banks, insurance companies, all these people are buying it. Yeah. So if you see the data from the last almost 3 to 4 months, the big players are buying it. There is a liquidity in the system. And why they're buying it? If I'll show you that data, this data is there in my next slide. This is the FI data, right? This is an FI data. And if you see from the last few months, these green candles, they started accumulating stocks. See, from the last 3-4 months. So the inflow is still there, but it has stopped. If you see the inflow of the price, if you see this inflow in the month of November, the inflow was big. After that, in the month of December, the inflow was still there. In the month of January, the inflow reduced. In the month of February, still there was an inflow. And it is as of now, we are on 23rd of February. Till 23rd of February, they have bought more than 22,000 crores of stocks. They have invested their money, right? So the inflow is still there. As soon as the outflow will start from the FIs, that was the day when the market will go on the downside. This decline, which is happening from the last 10 days, is not an actual decline. Market, I believe, will again go on the upside. And when it will go on the upside, I'll tell you those days, and I'll tell you those levels also in the next few minutes. Okay, I'll tell you those levels. So this inflow is still going on. Inflow has reduced. I agree. If you see this inflow from the last 2-3 months, FI's inflow has reduced, but still the outflow has not started yet. And I believe in the next 2 months, not in the next 2 months, maybe in the month of somewhere around, I'll say in the month of April or May, the outflow which I'm expecting to start. But as of now, the confirmation is still not there, but that is what I'm expecting. Why I'm expecting, I'll tell you those things. What are the levels which is I was thinking that market can go till what level? I'll share all those things. Okay. So this is the second criteria. First criteria which we have learned till now is the indicator which I've shown you just now, the HDFC Bank, the Reliance, and the SBI stock. All these stocks, big players are buying it. They are not selling it. You are thinking they're selling it. And if you see, as soon as the prices are going down, they're buying more. The prices are going further down, they're buying more. See, this is what it is happening. If you see this HDFC stock, the prices was at this level, they bought it few. After that, the prices goes further down, they bought it more. The prices go further down, they bought it more. This indicator is every day it is going on the upside. They're buying more every day, they're buying more, and it is reflecting in their inflow also. See, this is the inflow of FIs. This is the inflow of the complete. This is not HDFC inflow. This is the complete inflow. But if you see for the full month, except one day, 22nd of February, the buying is happening. The buying is happening. Okay. So first thing is the indicator. That is not the indicator which is available in the market. This indicator is created by myself. And in one of the video, maybe I'll take over how I did that. So that particular thing is showing you the market is going, they're buying it. Second thing, if you see the inflow of big players are still happening in the market. The people, they have not taken the money out. As soon as they will start taking the money out, yes, I agree, the market will start going on the downside. Third thing, this was the second thing. Third thing is, there is another way to check whether the market can go down or not. And that third way, which I usually check, is the fair value of stocks. You're getting my point? The third criteria, which I always check, is the fair value. See, these three criteria, these all criteria which I'm talking about in this video, you will not get any of these criteria in any of the videos, in any of the syllabus, in any of the courses. You will not get it. A lot of people will see indicators and these all stuff, but all these criteria, you will not find it, because when I always say is don't follow the masses. If you want to make money in stock market, or not even in stock market, if you want to do something in your life, don't follow the crowd. Kapil Sharma is only one, right? Amitabh Bachchan is only one. Why they are one? Because they don't follow the crowd. They have their own personality, right? So if you want to make money into stock market, if you want to make some career, you have to don't follow the crowd. If you will follow the crowd, end of the day, you will not make money. Okay. So these are the criteria which I usually check it. Third criteria, which I said, is the fair value. Fair value of the popular stocks. I'm not saying go individual to each of the stock. What does fair value means is, see, fair value is, what is the value of the stock? This price, if I'll show you one of these stock, for example, this is, let's take an example of one of these stocks called Maruti. Okay. If you see this stock called Maruti, it is trading at somewhere around 6,970, right? 6,970 is the current price of Maruti. Why it is trading at 6,970? Why this stock is not trading at 600 rupees? Have you ever thought about it? Why this stock is not trading at 16,000 rupees? How this price is defined? This 6,970, from where it is coming? It has a meaning, right? See, so I'll give you another example also. See, for example, I have a very beautiful house. For example, okay, but my house is very small. Will you buy that house? And the price of this house is 100 crore rupees. The house is good, but it is a very small house. The price is 100 crore rupees. Most of you will not buy it. Why? Because it is looking costly to you. Same way in stock market, this stock is good. But is the price is right? This 6,970 is right or wrong? How to know that? There is a calculation behind it, and that is called fair value. So I always check the fair value of the top stocks. When I'm saying top stocks, means those stocks which has a high weightage in Nifty or in Sensex. So if I say Nifty, it means HDFC Bank, Reliance, or SBI. So these stocks are still showing me that they are not near to the fair value. They're still trading at a discounted price. So for example, HDFC Bank has a fair value of 2,000 rupees. For example, I'm saying for example, it is trading at 1,500 rupees. It is still trading below to their fair value. So still there is a scope. Still there is a scope of prices to go on the upside. So this is the third criteria which I check whenever I see the market is going on the upside or not. Now I'll show you a very important criteria and something which is related to psychology. You want to hear it out? You want to know that criteria? Say yes in the chat box if you want to know that criteria. If you want to know that criteria, just type yes in the chat box and I'll show you that criteria. That is a very interesting criteria and you must have not heard about that criteria till date. Okay, great. Thank you. Thanks for the confirmation, guys. Okay, now that criteria is, if you see, this is a Nifty chart. Okay, I'll convert this into a weekly or a monthly chart. Okay, now if you see, this is a weekly chart of Nifty. And if you see any major decline which happened in the past, okay, which happened in the past, if you see this decline happened in the in the year of January, in the year of 2008. Okay, this decline started in the year of 2008. Okay, if you see this started decline. After that, if you see, if I'll zoom this, if I'll just zoom this chart, it will be easier for you to understand it, what I'm saying. See, this was in 2008, it started going down. And if we see this, the day when it started moving on the upside, it is in March 2009. On the top, you can see the date and the time. Okay, when I'll take my mouse pointer, if you see my mouse pointer, it is saying somewhere on March 2009. Yeah, so since March 2009, the prices are moving on the upside. What does that mean? These prices are going on the upside. It is because of me, it is because of you, or it is because of the big players? Tell me, guys. These prices are going on the upside. It is because of me, it is because of you, or it is because of the big players? Are the big players started buying it? Does that mean? Yeah. So think once, this is a psychological reason. This is not something technical reason. This is a psychological reason. And I'll tell you that reason is, think from that point of view, the people, the big players are like FIs, HNI investors, DIs, mutual funds, all those are called big players. So if they are buying it, started buying it in the month of 2009, will they sell their stock in the next 6 months? You getting my point? You getting my point? Will they sell their stocks in the next 2 months? As a retail investor, you do that. I do that. We sell our stocks in the next 2 months, 3 months, right? But they don't do that. They never do that. If they are buying their stock, they hold it for at least a year, a 2 year, or 5 year. They don't sell it very easily. Why? Why they don't do that? Why they don't do that? To save taxes. To save tax. This is a very interesting point. Listen to this carefully. This is a very interesting point. Whenever big players buy and invest their money into stock market, they don't invest their money into stock market for 2 months, 3 months, or 5 months. They invest their money into stock market for a long horizon, for maybe for at least for a year, for 5 years, or for 7 years, right? Why they are doing so? Because if you see tax point of view also, if you are selling your stocks within a year, you have to pay 15% tax as a short-term capital gain. Is that clear? Is that making sense? Is that making sense? Is this a valid point? Do you think it is a meaningful? If it is a meaningful, just click on the like button. Yeah. So they will not sell their stocks. They will not sell their stocks in the next 2 months or 6 months. Why? Because if they will sell their stocks, they have to pay 15% as a short-term capital gain. But if they will sell their stocks after 1 year, they have to take it as long-term capital gain, in which they have to pay 10% as a tax. So they will save 5%, and 5% tax is a big amount for them. It is not a small amount. So most of the people, big players, don't invest their money into stock market for 2 to 3 months. They invest for a long horizon. And why they do that? One criteria is to save tax. So most of the people, whenever this buying happening, they don't sell it easily before 1 year. Same, if you see, is reflecting in the chart. If you see, they started buying in the month of March 2009. They started buying in the month of March 2009. And if you see, next 1 year is March 2010. Is there any decline happened in the month of till before March 2010? See, this is March 2010. This top is March 2010. Till this point, there is no major decline. There are small declines, maybe for 1 or 2 weeks, but there is no major decline. If they started buying it at these levels, till these levels, there is no major decline. This is one thing. Let's go to another criteria. Let's see. See, if they are doing it here also, if you see, let's assume they bought it at these levels And this is June 2012. June 2012, they started buying it. Let's assume this is a psychological reason. Again, I'm saying that this is not a technical reason. Understand the psychology behind the buying and the selling of the shares also, right? So if they bought it in June 2012, they will not sell it before June 2013 to save taxes also. And see, is the June 2013, is there any selling come? No. See, this is June 2013 almost. October, November, this. So till these levels, there are declines. There are declines. I'm not saying the market is going upside in a straight line. Market never go upside in a straight line. There are declines, but these declines are small decline. And if you have bought the stocks at these declines, you would have made money. You would have made money. So if let's take an example of here also. In September 2013, let's assume they bought it at these levels because the market is in range. They bought it at these levels. So October 2013. So till October 2014, they will not sell their stocks. And October 2014 is somewhere around at these levels, October, November. And see, after that, the market started going down. As soon as the 1 year period is over, in the next 2 months, the market started coming down. This is happening every time. Is that meaningful? Is that making sense? Are you loving it? Yeah? Is it making sense? Tell me, guys. So this is a very important criteria as far as the psychology is concerned. I'm not saying it is a technical reason or a fundamental reason. This is just a psychological reason. Because as I always said, understand the broad picture of the market, guys. Understand the broad picture of the market. So because why I'm saying understand the broad picture, because if the market is coming down from the last 10 days, but still we know that this is not a major crash, we'll still make money. But if we'll get in that dilemma that, oh my God, the market is going on the downside, I don't know till what level it will go, most of the time I will be like little fussy. I'll not be able to invest my money into stock market. But if I have the broad picture clear in my mind, I'll be relaxing and I'll be making good amount of money. So always have the broad picture in your mind, right? So same thing, if we'll take an example of recent decline, which started in the month of February and March, and this decline closed somewhere in the month of, let's say, April, right? So let's assume they started buying in the month of April. So till April 2021, I'm not expecting any major decline. I'm not expecting any major decline in the market. This is my view. Maybe I can go wrong. Right? So please understand this thing also. But yes, as far as the criteria is concerned, as far as the insights which I usually check it, as of now, it looks that till March, April or May, I'm not expecting any of the major crash. There might be small declines, but not expecting any major decline. Is that clear? Is that making sense? Right? So that is one thing. Second thing, what you need to do is, so I have made a clear, broader picture in your mind now. Till April and May, I'm not expecting any major decline. Maybe after that, we need to view these charts again one more time. Maybe after that, we can see some kind of a decline, but not before April or May, I'm expecting. There might be small decline, but not a major one. That is one thing. Second thing, this decline, which is going on recently, from the last 1 week, as of now, the prices are trading at, this is a Nifty chart. This Nifty chart is showing you a level of 14,700 as of now. Today, closing level is somewhere around 14,700. As per my understanding, again, I'm saying I can go wrong. So please don't take this thing as a trading or an investment advice. I can go wrong. But yes, as per my belief, as per my understanding, it looks that market can go till 14,300. 14,300 is an important level as of now. Okay, so that is somewhere on 400 points more from these levels. So maybe in the next 1 week, maybe in the next 5 days, 10 days, I can't define the time. Maybe it can go tomorrow, 400 points down, but it will take at least maybe in a week. We can expect the market still go on the downside. If the market will change the trend, I'll change myself. Okay, so please understand this thing. If the market will change the trend, I'll change myself. But as of now, it looks that we can expect the market to go till 14,300, because 14,300 is a very important level. Very important level. Okay, is that making sense? Tell me, guys, is that making sense? All right. So I hope you have got some kind of information from this video and some kind of insights from this video, that where the market is heading, what exactly you need to do it. Again, I'm saying, guys, if you're not investing your money into stock market, you are at risk. So start investing in your money into stock market. If I'll show you There are a lot of opportunities available in the market every day, every month. These are the few of the stocks which we bought it. I bought it. A lot of my family, when I'm saying, is my students bought these stocks, and see the type of returns which we have made it in the last 1 month or 2 months. It's unbelievable. 33% return 1 month, 31% return in a month, 21%, 25%, 74%, 59%, 24%, 40%, 36%. These are the type of returns which we have made it. And still we are holding few stocks. I agree those stocks are still in a negative side. Not all these stocks. There are few stocks which are trading in a negative side. And we are averaging those stocks. Why? Because I know these are good stocks. These are good stocks. As soon as the market started moving on the upside, we'll make good stock. And see, these are only the returns from the last 2 months. These are the stocks which I sold it in the month of December, almost 10 stocks. Within 1 month, these are the type of returns. In January month, we sold it almost 11 stocks, which we bought it. These are the returns, 1 month returns. So market is crazy. That's the type of returns we are getting it. It is not always you get such type of returns, but yes, if you're getting picking up good stocks in your portfolio, you can make a lot of money. You can make a lot of money, right? And in this month, we have sold only 4 stocks as of now, because market is going on the downside as of now from the last 10 days. So I'm holding my portfolio, and I'm expecting market to, as soon as the market will move on the upside, I am buying few stocks today. Also, one of these stocks, I bought it in my portfolio, and I keep on accumulating those stocks till 14,300 levels. From those levels, I'm expecting the market to reverse. Okay. So if you're watching this on YouTube, please subscribe the channel before leaving it. And if you're finding it useful, please share it on YouTube, WhatsApp, Facebook, and wherever you find it useful.